If I want to send $1 million from me to you without a bank, Satoshi solved that. But inadvertently, when Satoshi solved that problem, Satoshi figured out not just how to send $1 million from New York to Tokyo without an intermediary, but how to send $1 million forward in time 30 years without an intermediary. If you can transfer something without an intermediary, then you can store something without an intermediary. So the killer app of Bitcoin is the store of value in cyberspace.
Bitcoin is reshaping the financial landscape by putting control back into the hands of individuals. As a decentralized and transparent digital currency, it promotes security, creativity, and financial independence in ways traditional systems can't match. This movement has drawn insights from industry leaders like Saylor, executive chairman of MicroStrategy, who recently weighed in on Bitcoin's potential to redefine our economic future. Saylor spoke with Trish Regan, co-founder of 76 Research, on Bitcoin's potential as a reliable store of value. He also emphasized its well-designed system and gave development projections based on his Bitcoin 24 model. According to Saylor, Satoshi Nakamoto's answer to the double spend problem allowed for trustworthy transfers without the use of middlemen. Bitcoin's major application, he noted, is as a cyber store of wealth. Saylor emphasized the need of $450 trillion in global long-term capital investments. He pointed out that investors favor established marketplaces, yet digital property in cyberspace becomes appealing when traditional possibilities are few. Saylor said that individuals and organizations without access to the U.S. market should reconsider capital storage. He stressed the credibility of Bitcoin, citing IRS recognition, SEC approval, and acceptance by publicly traded corporations. Saylor added that Bitcoin's long designation as a commodity strengthens its position. For more expert insights, let's watch clips from Saylor's interview. Like, subscribe, and turn on notifications for updates and exclusive content. Enjoy the video.
So first of all, what Satoshi discovered was how I send something of value between two different individuals without a trusted intermediary. So that's known as solving the double spend problem. But if I want to send $1 million from me to you without a bank, Satoshi solved that. But inadvertently, when Satoshi solved that problem, Satoshi figured out not just how to send $1 million from New York to Tokyo without an intermediary, but how to send $1 million forward in time 30 years without an intermediary. If you can transfer something without an intermediary, then you can store something without an intermediary. So the killer app of Bitcoin is the store of value in cyberspace. And what's that worth? There's about $900 trillion worth of wealth in the world, and about half of it is used for its utility value. People buy assets for their utility. They buy houses and buildings and boats and planes and pieces of art because they want to use them, look at them. But the other half of that wealth is assets that are purchased as a long-term capital investment or as a store of value. So $450 trillion of the world is long-term capital. And so if I take you and I drop you in Africa and I say, here, take $100 million, buy anything you want anywhere in Africa, but you got to keep it for 30 years. And, then I say, or you could have the same $100 million invested in the U.S. Most people would say, well, that's a no-brainer. I'm going to keep the money in the U.S. There's nothing I want in Africa that's as valuable as property in the U.S. But what if you can't have property in the U.S.? Then what if your choice is I can have 100 million worth of Bitcoin in cyberspace? I can have 100 million worth of digital property, or I can have 100 million worth of land in any country in Africa, or any building or any company or any bond or any currency in Africa. And the answer, when you think about it, is there's nothing you want in Africa that's better than having digital property in cyberspace. And there's certainly no place where you're going to trust your money or your assets for 30 years, much less 100 years, much less 1,000 years. So when you start to ask the question, where do the 8 billion people on the planet and where do the 300 million corporations on the planet, where are they going to store their capital if they don't have recourse to the United States and, property on the Upper East Side, the conclusion you come to is I'm going to put my money in cyberspace. And so Bitcoin's real use is it's digital property in cyberspace. It is cyber Manhattan. It is a place where you can store your capital and give it to your great grandchildren. And you know that you're not going to be taking risk against a bank as a counterparty or another company or country or currency or culture. So after 16 years, it has been copied 10,000 times. They all failed. It's the winner, right? It's the network that all the smart, rich people in the world chose. It's the bank in cyberspace. If you show up in a city and there's 10,000 banks and you have a bunch of money, and the question is, which bank should you put your money in? You go find every smart, rich person that you know in the city and you say, hey, where do you put your money? And if they all put their money in one bank, you're probably not going to put your money in a bank that's a million times smaller than them that only has poor, stupid people. So it was copied. It's the winner. It is the bank that's of choice of the smart money in the world. And will it be banned? You couldn't know that for 15 years, but the IRS legitimized it as property in 2014. The SEC approved a host of Bitcoin ETFs in January of 2024. Today, it's held by nearly 100 publicly traded companies. Every major regulator has certified it as a commodity, not a security. That was a judgment by the former head of the SEC under Trump, and that's the judgment of the current head of the SEC, Gary Gensler. So it's not getting banned.
According to Michael Saylor, Bitcoin symbolizes unquestionably sound money, made possible by advances in cryptography, the internet, and hashing algorithms. Previous initiatives, such as Hashcash and BitGold, were unsuccessful, but Bitcoin learned from these mistakes. Saylor focused on Bitcoin's decentralized network, absolute scarcity, and optimal frequency. Initially, its value was unknown. In May 2010, it traded for $700 million in Bitcoin for 2 pizzas. Michael Saylor's Bitcoin 24 model, which is available on GitHub, estimates macroeconomic developments over 21 years. He predicts huge Bitcoin growth based on a 7% annual expansion of the US dollar supply and AI-driven innovation. Saylor predicts Bitcoin will outperform the S&P index, rising from $65,000 to $13 million per coin, and accounting for 7% of global assets. His methodology enables users to make assumptions and draw conclusions. Let's go back to Michael Saylor's speech and watch more clips to gain insights from him.
And so Bitcoin represents the engineering of perfectly sound money. And it was only possible once those 3 technologies advanced. And there was a group of cypherpunks that were playing with cryptography, playing with the internet. And they saw the development of hashing algorithms like SHA-256 and the ability to build that into an application-specific semiconductor. And they probably tried this 40 times. There were products like Hashcash and Digital Gold and BitGold and things like that. And the first 30 or 40 of them failed. And then after about 40, some Bitcoin came along, and Bitcoin learned from the failures of the 40 before it. And it was the first truly decentralized crypto monetary network. And it was lucky because it just had the right monetary policy, which is absolute scarcity, 21 million. And it had the right frequency, a block every 10 minutes, the right bandwidth, the right protocols. And, when it was launched in January 3rd of 2009, did we know it was perfect? No, nobody knew it was perfect. In fact, it didn't trade for a year and a half almost. And the first time it was used for transactions was Pizza Day, around May of 2010, where somebody bought 2 pizzas with 10,000 Bitcoin. So at that point, 10,000 Bitcoin, $700 million worth of Bitcoin was traded for 2 pizzas.
Yeah.
And then people thought, well, maybe it's something, but it's still kind of a hobby. And it took another decade before it wasn't a hobby.
Well,
And
and you
hence
also
a
had
crypto
people.
network comes to life. We created a model which we uploaded to GitHub. It's in the open source community. It's called Bitcoin 24. You can just Google it and go grab it. It's an Excel spreadsheet, and it has macroeconomic models for the next 21 years, a Bitcoin forecast for 21 years, and then micro models for corporations and individuals and institutions and even nation states. And once you download that model, you can plug in your own assumptions about what you think is going to happen, and you can come to your own conclusions. But my assumptions are the US dollar supply is going to continue to expand about 7% a year. And that is the historic rate of expansion of dollars for the past 100 years. That's how I arrive at that. That's just how fast the money supply is expanding if you look at M2. And I think that there'll be innovation from AI. So some things like equities will probably grow a little bit faster because AI is going to have a boost to equities. I think over time, gradually, technology is going to demonetize gold and some of the other stores of value assets that were used in the 20th and the 19th century. But the 21st century, we're going to digitally transform property and transform gold into digital property, digital gold.
Okay.
And when you look at Bitcoin's growth over the past 15 years, it's been growing more than 100% a year for the first decade or so, and for the last 4 years, it's been appreciating about 50% a year in ARR. I think it's 50% a year in ARR, and it's 50 vol, which is like three times the volatility of the S&P and 3 times the performance of the S&P index.
Okay.
Over the next 21 years, I think it will grow faster than the S&P, and it's going to grow to the point where it's about 7% of the world's assets. Right now, it's about 0.1% of the world's assets. And I think that it will gradually approach, but it will never be as big as the S&P index or equities. It won't ever be as big as real estate. But in that world where it decelerates from 50% down to 20%-ish, it will appreciate from 65 or 70,000 up to 13 million a coin in my base case.
Meanwhile, Bitcoin's price rose amid geopolitical and economic uncertainties, particularly in light of the forthcoming U.S. election. Between October 27th and 28th, Bitcoin gained 3.2%, briefly testing $71,500. Bulls feel that current conditions support a long-term rise, fueled by socio-political and economic events. The 5.5% drop in oil prices following Israel's attacks on Iran did not affect energy output has moved traders' attention. As long as regional uncertainty exists, those seeking protection may consider alternative investments. The ongoing shadow war between Israel and Iran, as reported by CNBC, adds to market tension. Inflation concerns remain, perhaps driving traditional investors to non-traditional assets. Higher prices first boost business earnings, but eventually force consumers to cut spending. The next U.S. inflation data, coming October 31st, and the Federal Open Market Committee meeting on November 7th, will considerably influence policy decisions. Analysts predict a 0.3% increase in the core personal consumption expenditure index in September. The Federal Reserve's decision to suspend higher interest rates raises concerns, as taking a cautious approach could affect market sentiment. Investors are wary ahead of the U.S. presidential election, preferring cash and short-term government bonds. Historically, surveys have been wrong, putting markets on edge. Regardless of who wins, less uncertainty following the election may benefit risk-on assets, such as Bitcoin. Higher than expected inflation demonstrates Bitcoin's consistent and predictable monetary policy. A Kamala Harris victory could signal clearer crypto regulation, albeit the immediate impact on digital assets is questionable. Due to these variables, early 2025 appears to be a promising time for Bitcoin price increase. However, traders may postpone major bullish trades due to potential risks. As we conclude, what potential challenges do you think Michael Saylor's optimistic Bitcoin predictions might overlook, and how could these impact the cryptocurrency's long-term adoption and stability? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.